Great. Good morning and good evening, everyone. Thank you for joining the HashKey Capital Investor Relations call. We will start the call just in 30 seconds. Okay. Good morning, everyone, and good evening for those who are joining from a different time zone. My name is Michael Chen, and I am the Director of Business Development at HashKey Capital. Today, I am very pleased to welcome founder and CEO of BrainTrust, Adam Jackson, to our call. I think I've seen a number of participants who have joined our call before, and there are also some new names, new faces. So just I'm going to spend 30 seconds on who HashKey Capital is. We are a global technology venture investment firm specialized in the blockchain and crypto sector, and we are headquartered in Hong Kong. With office presence in Singapore and San Francisco, California as well. The principals have been investing in the blockchain crypto space since 2015, and we started managing institutional assets for external investors from our Fund 1 in 2018. So we are HashKey Capital. We're always at the forefront or cutting edge on crypto and blockchain investing. And also one of our missions is hopefully to preach the gospel or spread the gospel of the wonderful applications of blockchain technologies to our audience as well. So with that as a background, let me just briefly set the stage for today's conference call and why we have Adam Jackson on the call for the next hour or so. I think lots of folks on the call or that I've met, have all sort of recognized and realized, the potential benefits of blockchain and crypto. But still, I think for a lot of them, they just don't feel like they can touch it and feel it, right? They don't see a lot of, I would say, real world applications yet that leveraging blockchain technologies, crypto. So I think precisely to answer some of that questions, we are very pleased to, as I mentioned, had a chance to invite Adam Jackson, founder and CEO of BrainTrust. I think the world's first, decentralized talent network. I think talent network, it's safe to say, some people might say, never use DeFi, never use NFT, although heard of them before, but it's probably safe to say pretty much everybody on this call at some point in their career have used a talent network or a jobs board, right? Monsters Worldwide, LinkedIn Job, Glassdoor, or for those who are in Asia, BossGP, right? I think the concept of talent network or jobs board probably is very familiar to everybody. So, how does that work? Why would a talent network, a classic Web2, platform, can benefit and use blockchain technology? And that's, I think, today we're here to find out. So I'm very excited about today's topic. So before we kick it off, I just want to have a quick disclaimer out there for everybody. As usual, this presentation is for illustration and discussion purpose only, and is not intended to be, nor should it be construed as financial, legal, tax, or investment advice. And also, I want to say, we, HashKey Capital, we're very proud, actually, to be an early investor in BrainTrust. So just want to get that out there. Of course, if you want to be an investor in the blockchain crypto space, definitely do your research. And this call is not meant to be a financial advice of any kind. Okay. So with that as background, let me kick it off. Maybe Adam, I see we have over 60 attendees on the line right now. Very excited about that. Maybe just to start off, perhaps you could spend a couple of minutes, just give the folks on the line a little bit introduction about your background. I know you are studied computer science, a successful serial entrepreneur. What brought you to the exciting world of Web3? So maybe we'll start out with that.
Yeah, for sure. Well, Michael, thank you for having me. And before I get into myself and Web3 and BrainTrust, I want to actually thank you guys, HashKey, the firm, and in particular, the partner we work with, Sunny, who has just been phenomenally helpful as a co-pilot kind of network builder. She's so entrenched in this space. And, when you're down in the weeds building, as my team and I are, we're not always aware of every single other thing going on. So we actually put her on our Swiss entities board, and she's just been phenomenally helpful. So big thanks to the firm and to Sunny in particular. Before I start, it can't always be said that every venture investor is value add. So when it is the case, I like to call it out. So yeah, I'm Adam. I'm the co-founder of the BrainTrust network. My background quickly, I studied computer science at Vanderbilt University here in the US. Moved out here to California. I'm based in San Francisco now. I'm sort of engineer turned serial entrepreneur. My first web-enabled marketplace was a local shopping system that enabled local stores to advertise products online. This is in the early 2000s, before that was even really a thing. And we grew that to a nice business and were acquired by Intuit. Worked as a product manager at QuickBooks for a while, and then started my second company called DriverSide, which was an automotive Web2 marketplace connecting car owners with mechanics that had capacity for them. We grew that into a national marketplace as well, and were acquired by Advance Auto Parts, which is a retailer in the US. I then started my third company in 2012 called Doctor On Demand, which isn't quite a marketplace because nothing in healthcare in the US really is a marketplace, more of a managed service, but that is the country's largest video telemedicine service. And I ran that as co-founder CEO for 4 years. It's now a combined with several other companies, and will hopefully go public soon. But when I unwound out of my day-to-day duties at Doctor On Demand, I really got full-time in a blockchain. This is around like 2016. Participated in the Ethereum crowd.
That's pretty early to get into blockchain as well. So kudos to you.
I felt like I'd already missed it, but thankfully I hadn't. I'd owned Bitcoin for a while, and love the value prop of Bitcoin, and obviously solves a lot of problems, digital scarcity, and introduced some really interesting things. But it wasn't until Ethereum came around that I really got enamored with the potential for this space. And so I was in the Ethereum crowd sale, I was in the Binance crowd sale, and a bunch of other things that didn't work out too well. But I became obsessed with the potential of smart contracts to change how value is aggregated in an internet-based business. And so, as backdrop, right? Like my job, I've been an investor in probably 75, 80 plus companies, mostly Web2 marketplaces. And I founded 3 of them, not including BrainTrust. And, sort of like the dirty little secret with Web2 is you kind of sit around thinking about more ways to extract more money from your users, right? Because that's how you make money, right? It's like you take a transaction fee and you try to, your job is to figure out how to get that fee higher and higher and higher. And the higher that fee,
economic rent there, yeah.
You're charging your rent seeker, exactly. Yeah. And so, look, the higher that rent goes, the more eroded your network effects become, the smaller you shrink your network. You're essentially borrowing from your own future. And we all kind of knew that was true. And I thought, there's got to be a better way, right? There has to be a way to have the participants of the network also involved in the enterprise value creation, right? To keep incentives aligned early. And so I wrote this paper in 2018 called The Ownership Economy. And it was essentially an investment thesis. I co-founded digital asset management firm called Cambrian Asset Management here in California. And I thought, I'm done operating. I'm an old man now of 36 years old, and I'm going to invest for a living.
That is old in crypto universe, that's for sure.
I'm the oldest guy here by a mile, trust me. And so I thought, I'm going to start a firm, and we're going to invest only in digital assets, and I want to invest into this thesis of user-owned marketplaces. And so basically, I went around the world sort of meeting with teams, and this is again 2017 by this point, no one was really doing this yet, right? There was a lot of smart young people who understood the concept, but nothing was being built. There was nothing to deploy the capital into. And so I started, the idea wouldn't leave me alone. I was really obsessed with this idea of marketplace participants owning and controlling and creating value, sharing in the value creation of the marketplace where they make their living, right? And I envisioned a gig economy, people who deliver food, people in packages, being tokenized or user owned. The information economy, so knowledge workers can specialize and go off on their own. And that's kind of where BrainTrust came from. We actually incubated BrainTrust out of Cambrian. I stepped aside as a GP and came over to run BrainTrust full time. And that was in 2018. And so, we're 4 years into this experiment now. And it's going pretty well. A lot of the things we hoped would be true are coming true. And so, if you like, I have a few slides here I can kind of run through to sort of tell the story a little better.
Yeah, definitely. I think definitely. Love to Adam, have you spend 10 minutes or so, just give the audience a bit more a detailed introduction of what does BrainTrust do. I think. Before that, just a word to the audience. We love questions. But I suggest just to make sure the technology runs smoothly. If you have any questions to Adam and about BrainTrust, about anything about Web3, perhaps best to just send me a quick email if you're in front of the computer right now, or throughout the presentation, and just so that I can ask a question on your behalf. So I just put up my email address on the screen. So it's michael.chen, that's Chen with an E like Eric, at hashkey.com. So again, that's michael.chen@hashkey.com. So anytime in the next 20 minutes or so, if you have any questions, perhaps just quickly send me an email, and I'll make sure to ask that question to Adam. So yeah, so Adam, it would be great if you can share the screen, give the folks a little bit flavor of what it do. So before that, I just want to, I actually read a Harvard Business School report, or a case study on BrainTrust. So I think what it says is calling a blockchain powered talent network, and I quote from one of the professors or the authors of the report, that this is an enterprise level talent so far has not benefited from the kind of seamless transaction that lower skilled work has enjoyed since the emergence of gig platforms. So anyway, I'll use that as a backdrop and give the mic to Adam, and give everybody a bit more introduction of what BrainTrust does. Adam, go ahead.
Thank you, Michael. Yeah, and we link to the HBS report in here later as well. So first, I'd like to start off with a little background on what do you mean by Web3, right? It's an amorphous term. It's a bit popular to sort of make fun of it right now, and understandably so. But let's just frame it up historically. So Web 1, we kind of called it like the read-only web. It was amazing, right? It enabled instant sharing of information, content, and ideas, and importantly, value accrued to the users and builders, right? So great examples of services here, Craigslist and Hotmail. And so that was roughly sort of the early 90s to the early 2000s. And then it came Web 2, what we call the interactive web, or read-write web. And so these new services and marketplaces connected supply and demand in ways not possible before the web, right? eBay being kind of the first big ones, right? And then Facebook, and all the way up to the gig economy. Very importantly, though, the value created there accrued to for-profit corporations and their shareholders, not the users and the builders of those marketplaces or services, right? And now, so that's what kind of triggered the impetus for Web 3, which was what we call the ownership web, or the ownership economy. And here you have traditional Web 2 middlemen that extract more value than they contribute to a network, or being disintermediated by user-owned or Web 3 networks. And in this case, we bring value accrual back to the users and builders, right? And there's some examples of some early infrastructure and dApps there. So we'll dive into more Web 3 here. So this is a funny kind of hand-drawn graphic by an investor and author in the space called Packy McCormick, who wrote a very long thought piece about BrainTrust and Web 3. But this graphic kind of sums it up. In Web 2, the aggregator accrues all the value, right? It's Yelp Inc. that is valuable. It's Facebook Inc., Uber Inc. that are valuable. Not the users of those networks, right? They don't see any of that enterprise value. It's not that they don't get anything, right? But they don't get enterprise value. And then in the Web3 value chain, it's the opposite, right? The aggregator is basically replaced by open source software, and the fees can come down and the value redistributes out to the participants. So the big idea here is that Web3 networks will grow faster and become more valuable than Web2 networks. And I'll walk through sort of specifically how that works. So Web2 versus Web3, it's really a tectonic shift in value creation and network control. I'm going to go down the Web2 list first. So the business model in Web2 is corporate, for-profit. Network value accrues to shareholders. Network is controlled by executives and shareholders. The fee and the take rate, the take rate must go up, right? It's a fiduciary. That, in turn, reduces or erodes network effects, which incentivizes disintermediation, which reduces your total addressable market, right? These are all bad things. These are things that Web2 networks deploy a lot of capital and energy to avoid. In Web3, you sort of flip the script. You almost invert the playbook. The business model is a collective. It's a nonprofit. It's a collective owned and controlled by its users. There's not a profit motive in the middle. It's not that the users are nonprofits, right? The users are very much for profit, but they're getting the bigger piece of the pie this time. So the value accrues to the participants. The network's controlled by the participants. The fees and the take rates should be as low as possible because the owners are the users, right? So when you have low fees, your network effects can strengthen, right? The flywheel can actually spin faster, which leaves no room for disintermediation, which expands the market, right? So this is sort of the promise of Web3 from a business framework standpoint. So in talent networks, I'll now narrow, I'll drill into talent networks in particular, because that's what BrainTrust did. It's better for both sides, right? Here's some concrete ways. On the talent side, you set your own rate, you keep 100% of it. There's no fees, no markup. You own your verified reputation and work history, and you take it wherever you go. It's stamped into the blockchain, which is not true if you're on Fiverr or Upwork, or you did some projects for Deloitte, but you can't talk about them, right? This is all you own your history. And then you own and control the network where you make a living, right? You earn tokens for being a good participant. You use those tokens to govern the network, to decide how things should go on this network. On the client side, but you get the highest quality talent because of transparent vetted work history, right? Like it's not, when you go to a consulting firm and say like, hey, we're going to build an iOS app and we want your best iOS people, they're just going to give you who's available, right? They choose for you. There's no transparency. It's very opaque, and you're paying a big markup. And then finally, on the markup topic, the economics, right? When BrainTrust charges a flat 10% fee to clients to use the network, that means your dollars go much further than if you're using, a big consulting firm or a McKinsey or PwC or something like that. So these are, the hardcore value props for both sides of the marketplace. And so BrainTrust is focused on, right now, we're in a narrow but very deep category of knowledge workers. So it's product development, IT. We have many, many more enterprise logos in this. So probably about 800 or 900 clients currently and growing. And we place software developers, UI, UX designers, product managers, PMs, all kinds of IT people, both on a contract basis or a full-time basis. Freelance, in-house, doesn't matter what you want. It's a full job board now. We just rolled that out last week, as well as a freelance marketplace, right? It's sort of a one-stop talent solution for enterprises. And it's just a couple quotes from our clients. And Michael mentioned the HBS case study. Interestingly, they just did another one, and they're going to teach it. It's like a part 2 follow-up, because this is from a year and a half ago in February. They did another one, and they're teaching it this summer, and then they're going to publish it, I think, in the fall. It's sort of like a part 2, how's it going? We actually just got it sent to us this morning. And then, we build in public. So everything is pushed out to our network dashboard. If you go to info.braintrust.com, you can see all the gross service value that flows to the system every day, all the token rewards, people who refer for tokens. I didn't get into the details of the token economy here. I can later if it's interesting, but essentially jobs are transacted in dollars or euros or yen or whatever the client wants to pay. The token is used as a reward mechanism. So if Michael invites a bunch of his talented engineering friends in Hong Kong and they sign up, Michael's going to get a steady stream of tokens for that. If I invite Nike to the platform and Nike starts transacting, I get tokens based on Nike's transaction volume. So we basically like outsource our sales and marketing and all these other functions that would have been lots of employees. You outsource it to the community and you reward them with ownership in the network. And that's how BrainTrust, the Freelance Labs, the other core nodes of the network have been able to remain pretty small, under 40 employees typically, because so much of the growth in the activity, talent referring other talent, talent screening talent, people onboarding clients, et cetera, all happens at the community level. So I'll pause there if I can answer any questions.
No, thanks, Adam. That was a terse and concise and to the point brief intro, but it does, I think, leave more room for questions because I think people do want more. And I already gotten a number of emails already from the audience. So I'll just fire those questions to you in no particular order. So one question that I got is, well, I mean, this does not surprise me as perhaps the frequently most asked question is that, well, why do you need a token for this? As I think I mentioned earlier, talent networks are not new. I still remember when I was relatively young, monsters were putting up ads on the Super Bowl, right? I think in the early 2000s, like who do you want to be like when you grow up, something. So how this model better? So I guess that's the question. Why do you need a token for this? And how this model better? Yeah.
That's a basic question all tokenized networks should ask themselves and have a very good answer for before they start building or raising money. And so the answer here is really simple. It's back to kind of that big idea. User-owned networks will grow faster and be more valuable than investor-owned. Why? Because user-owned networks don't need to charge big fees, right? The job of a corporate talent network, Upwork, Fiverr, PwC, Deloitte, McKinsey, you name it, right? Whether it's a consulting firm, a staffing firm, or a real talent marketplace on the web, whatever, their job is to get the rake as high as possible, right? Mm-hmm. It's somewhere between 30% on the Upwork, Fiverr side, all the way up to could be 2 or 3x on the PwC, Deloitte side. And so that's good for the middleman. It's not great for the talent, not great for the clients. When you create a talent collective that is owned and controlled by the talent themselves and the folks that make the referrals or whatever, why would we want to charge ourselves big fees, right? Let's keep the rates kind of high-ish, but like cut Deloitte or Upwork out and keep that value for ourselves. You essentially take the value the middleman was extracting and give it back to both sides. And so that's a new business model enabled by a new technology, blockchain. Right? It's very hard. I'll drill into this a little more. It would be very hard to give, let's say we're going to tokenize Uber. It'd be very hard to give 50 million drivers in 75 countries shares of Uber. Uber is a Delaware C Corp, right? Like you can't transmit those shares. You can't custody them. You can't maintain a cap table with 50 million people on it in Delaware. But with a tokenized project, that's trivial. That's what blockchains are built for. They are distributed immutable ledgers. That's what they're built for, right? And so you can have a cap table for a tokenized project trivially built, right? And people earn BrainTrust tokens all the time in a permissionless way by signing up, getting a code, sending it to people who then sign up for BrainTrust, and that code tells me how many tokens should we send out to the referring party. It's all smart contracts. And so that's what it's the beauty of like a user-owned network with the accounting and ledger system, thanks to the Ethereum blockchain.
Well, that makes sense. Actually, while we're on the subject of token, maybe another follow-up question, and this is also from the audience, is because do token holders have a claim or some rights to the BrainTrust treasury? In other words, if for example the governance believe the platform somehow needs to be improved, would they have access to the treasury to sort of do something like that? And what will be, I guess, using Web2 world, the oversight for that sort of the process? Yeah.
Yeah, great question. So the short answer is yes. The longer answer is there's multiple layers to how it works. And so there's an on-chain treasury. You can see it on Ethereum. We call it a DAO, whatever you want to call it. It's it's a smart contract that holds lots of BTrust tokens. The way it's funded actually is when clients pay their 10% fee, they pay it in cash. That cash is then sent, it's converted to USDC and sent to a smart contract, which then goes out in the open market and buys BTrust tokens, sends them to our DAO. So that's how, I know you didn't ask that question, but that's how the DAO gets funded. And then how do funds get distributed? Simply through a grants program, right? Nothing new there, just like Uniswaps, just like compounds. Folks can apply for a grant. There's a grant committee. Let's say we want to localize BrainTrust for APAC region, right?
Yeah.
That's not something we're going to do from California. That's something a team maybe in Hong Kong would do. They'd apply for a grant. The community would vote. That's kind of the primary way that those tokens are dispersed.
Got it. That makes sense. It seems like the vetting process is a cornerstone for BrainTrust. I mean, rightfully so, right? I mean, obviously, I think one of the biggest challenge with talent network or job boards is, to use the plain English, are the resume, legit, right? Are they who they say they are? So if that's the case, what is the process of vetting look like? And how does the platform ensure the vetting process stays strong as the network grows? I mean, what if you do end up having 50 million users on this? So what is that like? Maybe you can talk a little about that.
Yeah, this is it's probably the most important feature of the network from the client perspective, because the hardest thing about talent or job boards or whatever is, are you who you say you are? Can you do what you say you can do? Right. And so the first one's KYC. That's pretty easy. The second one is actual talent and skill vetting, right? It's like, do you know Python? How well do you know it? Right. And so there's a combination of synchronous and asynchronous testing that the platform implements in order to triangulate and essentially judge whether someone, is as proficient as they say they are. And so we've developed some of it in-house. We borrowed some of it from others. And we have a small community or small screening team in one of our core nodes that kind of started the process. And then we branched it out to the community. So community members who are already vetted on certain skills can serve as screeners to bring in new folks. And then they're compensated in token for that. One of the parts of the flywheel that makes that work is, if I'm a Python developer and I'm verified on BrainTrust, I'll, in my spare time, earn some tokens to maybe verify some other Python developers. But as an owner of the BrainTrust network and someone who makes my living here, I have a vested interest in protecting our brand and our community and not letting some Yahoo who doesn't really know what he's doing he'll end up competing with me in some future job, right? And I might lose it because, so there's a strong network effect around quality. And as soon as as soon as the quality level goes down, you'll burn a client, the client leaves, that's less jobs for all of us talent. And, it's very bad, right? So there's a lot of strong combined incentives to keep quality high. And we really leverage the community to scale that.
Yeah, no. Definitely that's the case. I think let me switch gear a little bit, and we'll come back on more questions on token design and all that. I'm sort of putting on my, I guess, VC hat for the moment, and or investor hat, right? Obviously, this is a foundation, a protocol. This is the business. Who are you taking market share from? Are you expanding the market at all? Are you the so-called enlarging the pie?
Yeah, we're both growing the pie and taking business from two places. One, the big consulting firms are very low-hanging fruit, right? I'll give you a real example without naming names. A very large consulting firm was servicing a very large bank in the United States with hundreds of developers, and they were leasing the developers out for $425 an hour, and the developers were making about $75 an hour plus healthcare. And so we got a hold of that contract, someone brought it over, and we were able to, lower the rate, lower the rate for the bank, give a higher hourly rate for the talent. Everyone's happy. It churned out of the big consulting firm. So there's some of that going on, but probably a bigger part is big companies are realizing that they need to build software, right? And they need to do it as quickly as possible. And the talent they need to do it, they actually can't get in-house, right? We have so many clients, especially in the financial sector, Goldman Sachs, JP Morgan, Bank of America, First Republic, on and on and on, who've always said we will never outsource this stuff, who are now like utilizing BrainTrust talent more and more. And it's right, excuse me, it's because a lot of talent just don't want to be in full-time roles anymore, right? So it's sort of this unbundling of corporate America. Others were calling it like the Great Resignation, and that has a lot of weird connotations, but like a lot of talent just prefer now to be independent. They'll still work full-time, right? It's not that they want to work 2 hours a day. They just don't want to have one boss. They don't want to have one gig. They want the autonomy of remote work and be able to pick and choose and then take time off when they want. So because that is the way the talent have gone, enterprise clients are going that way as well. And so it's actually sort of, BrainTrust is almost taking market share from like what would have been these kind of full-time hires and come to the office and sit in a cubicle kind of thing.
Okay, so that sounds like that definitely is expanding the pie. Actually, you talk about, briefly on the slides about, I think you're focusing on starting off as a sort of IT development sort of sector, right? I mean, I guess a two-part question on that is, as you evolve further as a company, are you planning to, or is BrainTrust the platform planning to expand, the sectors that they're going to work, we're going to focusing on? And also part two of the question, might as well add throwing in there together, is related. How would a fresh graduate from university potentially use BrainTrust? Because it feels like, fresh graduate may not have, the talent, so to speak, that the business world or the tech world needs right away. So I think these two questions, I bundle them together.
Well, they're related. Good question. So today we play in this sort of experience, what we call enterprise grade tech talent. And that is the reason we started there. It's a very hard niche and it has almost unlimited budget, right? The TAM is just massive, right? It's 1.5 trillion a year in global IT outsourcing. And it's growing, right? It's just this runaway sector. Enterprises are hard to sell to and hard to navigate, and we know how to do that, right? My co-founder and I have been doing that for years, so that was our unique advantage. And I'm a tech person, so we know the supply side, we know the demand side. We start on the very hard and rich category, and we'll stay there for a while. And it's big, right? We've done what 90 million or so in GSV so far. The network will probably like double, triple, quadruple every year, whatever it is. And we'll get there, right? We'll keep growing large, but the space is so big. So that's part one. Part two is like, will we get into legal? Will we get into accountants? Will we get into financial professionals? The answer is absolutely yes. We need partners for that though, right? That's not our core. Like I'm a tech person. That's not my core competency. But the BrainTrust node model is built in such a way that we will be able to enable these other categories just by letting them use the software, use the token. That's probably another grant, right? So like a group of accountants will probably apply for a grant to say, let's build out BrainTrust accounting, right? And so that I think we'll see that stuff in the years to come. As far as your question about junior folks, like today, we don't have a good answer for them because we need more and more experienced people. We're actually building stuff though that will help them in their career advancement and basically feed them into the marketplace. So that's news to come later this quarter.
Got it. That makes sense. I want to go back to the token structure design a little bit. We do have it looks like a few Web3 savvy audience here. I think one of the question is, how is the, maybe you can elaborate a little bit more, Adam, on how is the BrainTrust token structure design and how the value sharing works for talents in the long run, particularly on the first part of the question, the design token structure. Maybe elaborate a little bit on that. Yeah.
So again, it's designed to be an incentive mechanism and a governance system. It's not meant to be a strict payment layer, right? Like the jobs are paid in dollars. or yen or euros or whatever. You earn the token, and you don't have to interact with the token, right? There are some people that don't. Most people like to, but you earn the token by helping build the network. So that could mean coding it, designing it, writing copy for it, promoting it, right? Writing stories about it, talking about it in social, being an influencer, or inviting more talent, or vetting those talents, or inviting clients, right? So there's tons of ways to earn the token. We don't expect people to go buy it, right? We don't think you should have to buy a token to participate in a network. We think you should be able to add value to it in other ways. And so that's how you get the token. And then you use it for, control, right? There's, you vote it, one token, one vote. You can decide on the rules of the network. Should we change the fees? Should this person get this grant? Should we move into accounting? Should we lower the standards of quality? Right? All these things that, may not matter to a lot of outsiders, but it matters to people who make their living on BrainTrust, right? And then another use for the token is to pay. It's required to pay the fee on the client side, right? So the clients pay a 10% fee to use the network. They pay it on every invoice. They pay it in cash because we don't want to make them go out and buy crypto either. It's too hard. And then that cash is sent to a smart contract, which goes and buys the BTrust tokens for them on their behalf and funds the DAO, right? And so that it's interesting. It's an interesting development that actually creates economic demand for the BrainTrust token, right? Every time Nike or First Republic or Bank of America pays an invoice, 10% goes and buys the token, puts it in the DAO, and so it's a fixed supply of tokens, right? So that creates an interesting token economy there, and still early days, but the community has done a lot of kind of interesting tweaks and things like that.
No, that's great. That's great. I think another question from me is, and maybe particularly Adam, given your experience of having led a number of startups, I guess both in Web2 world and now Web3 world, is this question of how do you bootstrap, right, something, right? So for the next generation of decentralized marketplace that is being built right now, I think it will be super interesting to hear from your experience on how the BrainTrust network was initially, bootstrapped. Can you perhaps talk a little bit about the initial network effects that you saw work well at BrainTrust, or maybe also talk about some of the challenges that you faced, or maybe still facing, as you try to scale the business?
Yeah, 100%. So there's a lot here. I'll try to just hit the important ones. So first of all, not everything needs a token, right? Let's start there, right? A lot. I'm sure you guys see a lot of pitch decks. I see a lot as well. A lot of them don't make sense, right? It shouldn't be a substitution for fundraising. It shouldn't be a substitution for critical thinking, right? A tokenized network should make it much better than what you're displacing. So in our case, user-owned is better than investor-owned, right? No fees are better than high fees. Owning your reputation and work history is better than not owning it. Clients accessing the talent directly is better than having to work through a middleman. So it's clear, right? For bootstrapping, so what we did, all two-sided marketplaces suffer from this chicken and egg problem, right? Like you build supply, then demand it, right? And you got to figure out your attack strategy there. There's no right answer, right? You just kind of do where your unfair advantage lies, and hopefully, if you're starting this business, you have some advantage that others don't. In my first business, like I got all the stores and merchandise first, then I SEO'd them and brought the customers. With Doctor on Demand, we started with 100 great doctors in California, and then my co-founder was Dr. Phil, the TV personality, and he has lots of fans we were able to access for free. So my demand side was zero CAC, right? It was zero cost of acquisition. That was our unfair advantage, right? So I would not have started a telemedicine company without some unfair advantage. And Dr. Phil is about as unfair as advantages get. And then with BrainTrust, our unfair advantage was the business model, right? Like user-owned, right? So I pitched this user-owned thing to 100 engineers, designers, folks that I'd work with. I'm like, hey, will you be our first 100 members? Right. And we'll give you tokens. And the token didn't even exist yet. It was just an IOU in a database. And we pitched the value prop, and they said, yeah, I'll do this. I'll put myself on there at least. And then we asked them to invite the next 900 talent members, and just to test the value prop, right? Like to see, do people actually care about this? And like, will you invite others in order to earn this token? And token wasn't trading anywhere, wasn't on mainnet, had no cash value, but it did represent future control in the network. And so we built supply first, then brought in our first client, that was Nestlé, and our second client, that was Porsche. And the clients are like, yeah, I don't care about blockchains or tokens. I just want that guy to work for me, right? They don't care about crypto. And so, and so that's how we, yeah, they just want the talent, right? They don't care. And so that's how we bootstrapped the network. We tested and validated the value props on both sides before the token ever existed. And then, we put a token on mainnet and got it running. And we're doing, I don't know, a couple $1 million in GSV on testnet before we ever had a live token. And then we kind of shifted gears and decentralized the network and dispersed all the tokens to all the folks that had earned IOUs. And that was, a big step in our progressive decentralization of the network.
Yeah, no. Well, we have a number of interesting questions keep coming up, and again, we do appreciate all the questions from the audience. Just one last reminder: if you are interested in sending the questions, just send me an email at michael.chen@hashkey.com, and then I'll make sure that the questions are being asked to Adam. So Adam, another question is, again, going back to the token and token holders a little bit. And obviously, you can imagine most of the folks are very interested in how does the token work? What is the design model here? Another question from the audience is that, will token holders get a share of dividends, or maybe how that work? And or additional question together with that is that if the rewards is in the form of tokens, I mean, obviously, the value of the token, would appreciate or depreciate in line with some sort of market volatilities. Are there any efforts in place that somehow will ensure the value of the token somehow is I guess is stable for the users in the sort of medium long term?
Great questions. Let me a couple good points in there. So I'll sort of take them in reverse. First, token price stability is actually not a feature requirement for the network, right? One token does what one token does on the network, whether it's a 10 cents, $1, $10, $100. The network doesn't care what the cash price is, right? So that's a fundamental
US dollar equivalent prices. Yeah,
exactly right. It just doesn't matter, right? That's why it was able to run, at a peg. Basically we fixed the price of a penny or whatever, and it worked the same way as it does now. Look, having a cash value of a token, it has other implications in the network and may have other effects on the network's growth. But it's not like a valuable or appreciating token isn't a core requirement and was not a design feature. It doesn't mean it won't appreciate, doesn't mean it won't be volatile, all those things, right? But just level set. The second point about earning token rewards and all this stuff. So today, the token is strictly a utility token here by United States standards. It fails the Howey test. It's not a security. We've had a lot of lawyers kind of work with us to ensure this. And for that, and one of the things, if you want to remain not a security, you launch without dividends, essentially, right? It's not a claim on profit. If it's a claim on future profits, it's problematic in the United States. Now look. That said, we're decentralized now. We don't have full control over the network anymore. And there was a community proposition proposed and passed in our snapshot that proposed a staking reward system. We don't know who did it. We don't know if from what we hear, it's being implemented. I have no idea when and if it'll go live. Obviously, there's some appetite for that. That's one of the beauties of a decentralized network, is like anyone can kind of pull and do their own thing. So that one's out of my control. But what I think is like, what we work on here at the core team are building more valuable use cases for the token, right? You should be able to earn the token and then have an incentive to use it instead of just selling it. So use it to expand your career, use it to up-level your skills, use it to make yourself more competitive in a bidding process, right? These are all like things that we're building and testing, and we're going to roll out before the end of the year, some of these big ones. And these are all reasons to accumulate more tokens if you're talent and actually use them on the network to make your career better, to make yourself more compelling. So that to me is more interesting than, like a staking reward that's just going to get sold off into the market anyway.
That does make sense. We have another question, I think, from the audience, which I think probably is good for you to clarify a little bit, if it needs to be, to the audience. I think the question is, what's your thinking around opportunities from clients involving revenue sharing or some sort of ongoing royalties, and how might that interact with the token? My thinking is that the token sort of does that feature, but I want to throw that question to you, Adam, to talk about whether revenue share, royalties, token, and how these interact, and if they are applicable to BrainTrust.
Yeah, look, this is a really interesting creative surface area here. The idea of royalties or staking talent might be another way of saying it. Like, hey, Michael's a senior guy, I'm a junior guy, but Michael might refer me to a client and say, look, put this guy in, and I'll stake some tokens on him. And if it works out well, Michael, will get a little kickback, basically a rev share, right? A royalty on anything, young Adam here does for the client Nike. That is something that's been kicked around and discussed. I think it's a cool idea. To my knowledge, it's not being built right now. I think it would be a very interesting feature. Another interesting thing on this topic is something that actually Consensus just released or just intended to release a blog post about, is essentially atomizing units of labor. So, and then selling NFTs that can be redeemed for that unit of labor. So they call, I forget what they call it, but like, it's essentially like they have an NFT that represents, it's like 10 hours of smart contract audit services, which are, obviously very valuable services and, hot commodity, right? So they're going to mint NFTs that represent 10 hours of smart contract audit services. They'll auction them off, and then there'll be a secondary market, right? So like the price of that NFT will actually determine what the market rate for that service is. That's super cool. I think there's something BrainTrust could learn there. But when you tokenize people's time or expertise or both, you've opened up a whole new world of price discovery, of value creation, of value distribution. BrainTrust is just scratching the surface here. So, I think it's a cool idea.
Yeah, no. We have another question I think I myself would like to ask as well is, and Adam, by the way, this is incredible amount of incoming questions, and I even have a comment. Why use email for as a format of asking questions for Web3 seminar? I think rightfully so. Because I did not anticipate this topic will be so interesting, and there'll be this many questions, right? I underestimate the transaction per second, so to use a Web3 parlance. So this question back on token from actually the friends of HashKey. Regarding use of token as a proof of expertise, I think a lot of people are interested in that. How would you verify someone's talent if the token can be bought or sold? I think that was a question.
Yeah. So today the token does not represent proof of expertise. It's an incentive mechanism, right? They're fungible tokens. BTrust are fungible, right? They're not NFTs. I will tell you though, it is public knowledge, we are working on a BrainTrust NFT, which will represent your work history, your reputation, potentially your earnings if you want to expose that, your ratings, things you've been verified on. It will be a non-transferable NFT for the exact reason that person just said. Now it's not like, okay, well, if you lose the private key, right? It's like losing your password on a site, right? There'll have to be a remint process, but we're hoping, sort of embedding and moving a lot of this stuff, the professional history and all that stuff into an NFT will actually make it more portable, and we'll make it usable. Maybe some HR platform will read from BrainTrust NFTs in the future, and you'll have Goldman Sachs HR writing to it, and Nike's HR writing to it, via the BrainTrust NFT framework we're building.
That makes sense. We have another questions I think around taxes. Again, Adam, let us know if a decentralized platform has this sort of I guess have to think about the taxes. And the question is, do the talent who are paid by token for wage need to pay income tax? And if the users are worldwide, I mean, it seems like that make the managing the global tax situation quite complex.
Yeah, well, it's a good point. So a couple of things here. First of all, they're never paid wages in tokens. They're paid wages in
That's
fiat.
what I saw. Yeah.
Yeah, and so obviously, like we partner and wrap around tax and payroll systems like TriNet and a dozen others.
Yeah.
But that doesn't ameliorate the issue though. If you earn tokens, for doing work on the network, that's compensation, right? That's income, and so it should be treated as income in whatever jurisdiction you're in.
Yeah. Okay, that makes sense. Cool. I think we are almost toward the end of our call. So again, it's almost like I'm saying bar is closed, your last call kind of thing. So if anybody has a last minute questions, feel free to shoot me an email, and we'll work on maybe getting a better system of sort of like raise their hands kind of functions on next time. But this has been absolutely amazing. Thank you, Adam. I think just to maybe talk a little bit about, I would say growth, right? I mean, I think my $1 million question is why now, right? What's allowing you to grow now, or the bottlenecks, if there are any, and what needs to happen, for BrainTrust as a decentralized talent network platform grow faster? And together with that, I have a very good question from the audience is that, today, standing 2022, do you think the vast global talent pool, will be able to understand crypto and token well enough to embrace it? Again, this whole idea of, financial inclusivity, or bring crypto to a billion people idea. So maybe you can just comment on that about sort of the growth, why now, and what would allow you to grow faster, and if, the understanding, because it's still rather niche today, crypto and token might be, a bottleneck or not for more people to embrace a BrainTrust.
Well, those are two related questions for sure. So I'll answer it in kind of two parts. Like, what had to be true to get us where we are now is like blockchains had to exist, right? So that got us here, but blockchains are still hard to use, and they're still slow, and they're still clunky. And so we've done our best to wrap the blockchain in our own UI. If you go to braintrust.com, it doesn't smell like Uniswap or Compound, right? And those are great services, and I love them, right? But it smells like Web 2 because it's easy, and it's got the blockchain kind of obfuscated behind. So we think it's totally like the new features we're building. We will never force people to use something like MetaMask, right? It's a great tool. I'm a developer. Fine. You can never ask a real person to use that tool. You just can't. And if a company is requiring its users, or a project is requiring its users to use those kinds of tools, they will always be small, just by definition, right? Those are not usable. And so I come from a consumer internet background. We can do better, right? So what the tailwinds are remote first, right? All knowledge work is being done or will be done remotely. The COVID was a horrible thing to happen to the planet, but that's the silver lining, was it forced the remote work issue, thankfully. The unbundling of corporate America. People don't want to be full-time employees. They don't want to commute to a cubicle. They want to specialize and pick and choose. These are massive tailwinds driving BrainTrust growth. What's standing in front of us? A couple technology things, blah, 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 but mostly just awareness, right? Like, this is kind of why I do these things. This is why I go speak at conferences and go to Gartner and speak to their clients. Like, when I spoke in Chicago a month ago at this Gartner conference, this is the first time I gave this presentation. We had folks in the audience who recognized their own logo on that slide. We're like, hey, I work at Nike. I didn't know we could use BrainTrust, right? And it's like, okay, well, let's get you on board. It's just awareness, right? Things just got to spread. And so it's great. It's a good place to be, right? It's just execution.
Yeah, well, that makes sense. When I talk about last call questions, which I did, I get a last call question. I think it's a great question because I love those sort of tech, idea growth type of questions, and hopefully it's somewhat inspiring to you, Adam, as well. So we have a question which is curious about the skill credential-based token idea. So LinkedIn, is probably sitting on a large, a gold mine of data, but probably they're not really, properly utilize that data, if you will. Is BrainTrust a disruptor in that regard?
Yeah, look, I think we think a lot about this topic. So it's a prescient question. If you think about your professional identity on the Web 1 resume was your PDF or your Word doc, right? Just said where you went to school, said where you worked. It was just a facsimile of the paper resume. Your Web 2 resume is your LinkedIn profile, right? It's still easy to make it inaccurate. It's still easy to, the recommendations don't mean anything. The plus ones, it's all kind of garbage in, garbage out. I would say to your statement about gold mine of data, I would say they're sitting on a shale deposit of oil of data, right? They have to frack that ground before they get any real value out of that, because there's a lot of garbage between the oil and the drill. So I would say that's what LinkedIn is sitting on. But and LinkedIn is the undisputed champion of resumes, right? It's your professional profile. I think your Web3 professional profile is going to look a lot different. First of all, you're going to own it. Second of all, it's going to be verified. It's not going to be all self-attestation. It's going to be, hey, Goldman, I earned, X hundreds of thousands of dollars from Goldman Sachs, and I know because they paid me, and when they paid the invoices, it got stamped into the blockchain. It's immutable. You can't fudge it, right? It's real. And then maybe there's some future versions of BrainTrust where users are helping each other get jobs or do upskill or whatever, and that then is an attestation of what kind of employee you are, right? And that is part of your profile. So it's not just all this self-congratulatory, self-adulating stuff you see on LinkedIn today. It's actually real stuff, right? So that's where I think Web3 is going in the sense of your professional identity.
Yeah, that's a good question. I think that just two more questions before we wrap it up. This has been a great call. Adam, because obviously BrainTrust has a native token, right? BRST. But do you see all different tokens will become exchangeable among, I guess, future Web3 platform players someday soon? I mean, as an investor, we're looking at a lot of these parachain, cross-chain ideas, but love to hear your thoughts as well on this. Do you see different tokens being exchangeable?
Like exchangeable across different L1s?
I think more among the different platforms and players, right? So you have your token, if somebody else does another token, kind of things.
Yeah, so there's two aspects to that. The short answer is yes. The longer answer is, today BTrust is a ERC20, so it's native to Ethereum. It cannot be bridged to Polygon or Solana or whatever yet. I'm sure that will be true someday, right? Polygon will be true soon. And then the second thing, can you swap an ERC20 for another? Yeah, that's what Uniswap's for, right? Or Coinbase or Binance, right? You can trade any pair you want, as long as there's liquidity on the other side. Yeah, definitely. Great. I think we are 1 minute to the hour. I think the last questions, Adam, for you is, I think it's a good question from the audience, but I think great concluding question as well, which is, what's your vision for BrainTrust in the next 5 to 10 years? I think you addressed a little bit on this throughout the call, but it would be great as a concluding remark. What's your vision of BrainTrust in the next 10 years, 5 to 10 years? And how do you think this platform will look like in a more established Web3 world 5 to 10 years from now? Yeah, for sure. Well, this is the fun part, right? This is what kind of gets me getting out of bed every morning and working on this. And this is my passion project. I wasn't looking for a job when I started this, but 5 years, BrainTrust is the default talent platform all companies go to access talent, whether it's freelance, part-time, full-time, in-house. They go there because all of the talent's already there. The talent aren't paying any fees. The talent own the network, so they're enjoying the enterprise value creation process. And all of their reputation, work history, skills is all immutably embedded into this platform. It's the new. It can't be faked. It can't be messed with, and it can't be corporatized. It can't be marked up 2 or 3-fold because it's a public utility, right? It's a public good that helps all of its participants transact better, whether it's clients needing talent or talent needing clients. And so if we can get this thing big enough and standardized enough to be the first stop for both sides of the marketplace, that's a big win. Yeah.
No, I think in concluding from my part, I do see a number of audience participants. They actually represent, large companies. So in addition to have a number of investors on this call, I'm just going to throw a little bit of advertising out there for BrainTrust. I think if anybody from the call are interested in using BrainTrust as a decentralized talent platform for your company, so Adam, what's the best way to get in touch?
Yeah, absolutely. We'd love to help you. Adam@braintrust.com. Shoot me an email. We'll get you sent over to the team. That's Adam, ADAM, @braintrust, BRAINTRUST.com. We'll get you taken care of.
Yeah. I think if Porsche, Nestlé, Nike are using it, so hopefully this this platform can be useful to any of the companies that I think some of the participants in the audience work for today. I think we are at the hour. Adam, I want to thank you very much for the call, for the time. Obviously, it's a little bit on the later side on the West Coast. Thank you very much. We love the idea. We love the energy. We love the enthusiasm. And we here at HashKey, we also want to see real world applications, leveraging blockchain technology, and sort of that technology and application that bridge the so-called Web2 and Web3 world. So I think, Adam, you're leading the charge on that front. Thank you very much.
Well,
great.
Thank you, Michael. Thank you.
That
thank you,
HashKey.
Really appreciate the firm. Thank you.
Yeah, and I want to obviously thank my colleague Sia and Filene and Jason from our marketing and strategy team for helping me from HashKey to put together on this call. HashKey Capital, we will have more hopefully insightful, interesting calls going forward, roughly on a monthly basis. We're not so much tied on the time, rather we want to find interesting topics such as one today for the audience. So on that note, thank you very much, and that concludes the call today. Adam, thanks again.
Thank you.
Okay. Bye, guys.
Bye-bye.